Good afternoon, everybody. Hopefully you can all see the slides again now. Small technical hitch up. Welcome to new attendees and see some new names in here. So let me just run through some admin before we get going, and I'll get through my EMA, stands for the Exponential Moving Average Crossing Strategy, and how to set up your charts. It's very basic, it's very straightforward. And it's a simple system that works on 1 hour, 4 hour, and you can apply it to the time frames that fit your mindset and your lifestyle. So let's get going before we get going. So this business is risky, and let me just read this through. The material here is provided as a general marketing communications for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or indeed an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in Forex and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. And finally, this communication was not be reproduced or further distributed without our prior written permission. So welcome, everybody. My name's Stuart. I'm one of the market analysts here at Hot Forex. I worked in the City of London investment banks and retail banks for the best part of 20 years. More importantly for this role here, so I've done lots of different things. I've been teaching for a while, but I've run my own consultancy business as well. But basically, I've been investing my own money, my own hard-earned money, for over 20 years. Sorry, somebody just written, you must know that disclaimer off by heart. Well, yes, I do. I sort of say it in my sleep, but it's important. It's not flippant. This business is risky, and it's all about managing your risk. So you really got to understand the basics. Jonathan, anybody else who thinks the disclaimer, so take it seriously. We had a big thing that triggered me into pushed me into it. I was in my mid-30s. I'm in my mid-50s now. I love this business. I love teaching people how to get the best out of it. And for me, there's 4 key things. I like to keep things. I like to if I see something that's probable, or I think it's probable, I take the trade. I like to keep things as simple as possible. Sometimes people say, well, your charts look really complicated. There's lots of lines and squiggles and different colored lines. What do they all mean? Well, for me, they're quite simple. Obviously, I appreciate for a new guy that they might look a bit complicated, but we're going to build that up today. We're going to see how simple it is, and hopefully that's what we get from the end of today. I like multiple time frames. I tend to trade with my own cash on the daily time frame, but I said this 1 hour and this 4 hour time frame we've got here works quite well as well. But the most important thing for me is to know yourself. You've got to accept that this business, you lose a lot. Unlike any other business, I don't know what you guys do out there, but if you're a mathematician, or you're an accountant, or you're a doctor, a lawyer, an accountant, whatever it is you do, you can't get your job wrong 50% of the time and still be successful at it. In this crazy business of trading, you can do that. As long as you manage your risk and keep your risk small, you can get things wrong a lot of the time and still make money at the end of the day, or the end of the week, or the end of the month. There isn't another business in the world that can say that with hand on heart, and it's very simple numbers, but you've got to understand that, and you've got to understand yourself, and you've got to understand that you lose a lot in this business. So today we're going to go through this EMA strategy. It's very straightforward. It's nothing complicated. It's nothing special. It's not it's not a robot you have to pay for or anything like that. It's not the best thing in the world. It's not the worst thing in the world, but it works quite effectively. So for finding and entering trades, key thing is obviously the target and the stop loss. Don't get too greedy. Don't worry about where the stop loss has to be. The stop loss has to be, and it gets hit a lot of the time, and that's just part of trading, and that's what it is. And as I say, I mention risk management all the time. I can talk all day about risk management and money management. For me, it's the most fundamental thing in trading. You can have a really great system that's making 90-odd%. I've seen them making 90-odd% winning trades and still end up losing money because their risk management system's poor. They stay in trades too long. They don't get out. They can't accept losing. And that for me is by far the most important thing. So any questions, obviously, stick them in the box. I have a tendency to talk too quickly, and I appreciate most of you for most of you, English is perhaps your second language. So if I'm talking too quickly, ask me to slow down. If there's anything you don't understand, please, there's a slide missing off these slides. There should be please email us at webinars@hot4x.com. Webinars@hot4x.com. Is there anything at all that you don't understand? And for some reason that slide's missing off these introductory slides. So before we get going, let me just run through the strategy, or any strategy, or anything you hear from anybody, because this business is all about you. It's not listening to guys like me prattling on about how to do it. It's not watching videos on YouTube watching people how to do it in perfect circumstances. It's you not against the markets, but you against yourself in a sense, because trading is quite often a lonely business. More and more now there's like social trading platforms where you can copy successful traders, or you can trade in a group, or I know lots of people that sort of meet once a week and decide what sort of trades are going to take for the rest of the week. But it's very much about being able to, that first point there, being able to accept a loss. So if you've got a system, you still need, whether you're trading on your own or with a group, you still need discipline and patience. Discipline to take the trade and stay in the trade. Patience to stay in the trade, to let the trade breathe. Whether you, and that is as relevant whether you're trading this 1 hour strategy we're going to talk about in a minute, or a daily strategy, or a 4 hour strategy, or even a 15-minute or 5-minute strategy. Those of you that are scalpers, 5 minutes can seem a long time, or 10 minutes can seem a long time. You've got to have patience and discipline. They're fundamental things for successful traders. So it's all about protecting the money you've got. So capital protection, understanding the simple numbers. You've got to understand leverage, margin, spreads and stop losses and all that sort of stuff. Things. Sorry, Victor. Yes, I certainly will. There's a link. Yesterday's video should already be up on the YouTube site, Victor. So have a look at it there. And if you were here, if you were there yesterday, you should have already had an email about that. But certainly you'll get one today. Very good question. Donna's just asked a question here. What's the difference between having patience to let the trade breathe and staying in the trade too long? Well, that's what the other key fundamental thing that good traders do, Donna, is they have a stop loss and they always have a take profit. So they're comfortable that when the stop loss gets hit, they lose, not comfortable, or they're comfortable with the amount of money they're going to lose, or the amount of pips they're going to lose. So the trick is, or the issue is, having sufficient money or sufficient capital in your account so that you can only lose 1 or 2% each time the stop loss gets hit. Because if you accept that you're going to lose 1% or 2%, you can get 100 or 50 trades wrong before you empty your account. If your stop loss means 10% of your account goes or more, which I've seen many, many times, you only get 10 chances before you empty your account, and you get no experience then of trading real money. So that's why trading with a stop loss and trading with a take profit, which you'll see today, Donna and everybody else out there, every time I put a trade on, that's exactly what I do. It's sort of I'm a bit like a robot, but I'm not a robot because I do it manually. So it's all about that. 2 key books which I'll talk about at the end: The Reminiscences of a Stock Operator and Trading in the Zone. They're available as free PDFs now. Read them, reread them. Absolute classics of trading. One's about psychology. This one by Mark Douglas. This is just, this one here, Reminiscences of a Stock Operator, is 96 years old now, and it's the best trading book ever written, in my humble opinion. And more on that later. And basically what I do and how I trade, and I say I trade up on the daily time frame typically, but 4 hour and 1 hour, I can't do that because I'm here teaching people, talking to people all day. So, but anyway, let's have a look. So there should be a chart here. Sorry, this is the I don't know why it's missing, but anyway, this is how to set up the charts, and this is what it is basically. I talk about the 1 hour and the 4 hour, and we'll have a look at it in a minute how we set them all up. So it's basically the exponential moving averages, the 5, the 9, and the 200. This is what's on, should be on your chart. I use the Bollinger Bands for the midpoint. The 20 line is the midpoint of the Bollinger Band. That's what I'm looking to cross. That's the second trigger. I use the RSI, which is the relative strength index at its standard setting at 14. And the ATR is the key one because I use that for setting targets, and that is the average true range. And again, that's the default setting that sits below the chart. I also have the daily pivots and fractals on there as well. Some of these I just have them for just stuff that's on there, and they give me an extra comfort factor. Too many stuff. I mean, a lot of people say to me, well, that's an awful lot of stuff. You said it was simple, but you got 5-6 indicators on there. So you got a very busy chart. Well, it works for me. If it doesn't work for you, find something that works for you. Okay, and that's what this business is all about. There is not one single indicator or combination of indicators that is the holy grail of trading. It does not exist. You lose a lot in this business, and it's all about managing your losses. That's what successful traders do. Read any books or watch any website or listen to anybody talking about risk management or money management. It's all about managing your losses. So this works for me. If it doesn't work for you, so be it. Go and find something that does work for you. It might be stochastics, might be what swings your boat. You might be a Elliott wave perfectionist. You might like the W's, the M's, whatever it is. There's thousands and thousands of indicators. You might be a simple, take all the indicators off your chart and just try and trade intuitively off the prices it moves. I've only ever known 2 people that I've sat next to in banks that are successful at doing that. Everybody else I know that succeeds at this has a system and follows the rules, whether it's an automatic system or a manual system or a half automatic system, half manual system, whatever it is, they have rules. And my rules for this system are we need the 5 and the 9 EMA, the exponential averages, to cross. So if the 5 crosses from below, it's a signal for a potential long trade. If it crosses from above, it's a potential signal for a short trade. The second trigger, or central entry rule, we need to break the midpoint of the Bollinger Band. So if we're going to go up, the candle time frame we're trading off needs to close above the midpoint of the Bollinger Band. If we're going to go short, it needs to close below the midpoint of the Bollinger Band. And the rest of it just falls into place. So at the close of that candle, we enter either a long or a short position, and the target is whatever the ATR is at that time of that candle closing. So at 4 o'clock in the morning, it might be 10 pips. At 5 o'clock in the afternoon, it might be 15 pips on a particular asset. But there you go, that's what we do. The stop loss, so that creates the target. The stop loss has to be, and this might sound a bit odd or a bit flippant, but it has to be where it has to be. Okay, that's what I've written down here. It has to be where it has to be. So it's usually typically above the turn that created this trigger. So the turn in the market, and that's how I'm trading. I'm looking for turns in the market. Okay, and so the target is 100% of the ATR. On the lower time frames, anything below an hour, and the ATR gets quite small on lots of crosses. So and if your spread's big, it makes it not worthwhile. So that's my minimum usually is about the 1 hour time frame. But you could take the spread off as well if you're trading. So 1 or 2 pip spread off your target. Okay, so that's the standard setup. We'll go through it all again in a minute. If it doesn't make sense, we'll have some cross. So here we are. This is an example of one that triggered it. This was put together before well, I'm assuming it got looked like it was on its way to target. Perhaps it didn't. Perhaps it was one of those that turned around. So let's just run through this again. So the 1 hour setup, I call it the 1, 2, 3, 4, 5, 6. The 6 numbers on here, and this is how the trades are set up. So we got 1 here. The exponential moving average is the 5 crosses the 9 from below, so we're going long. So on this particular chart, the dark blue line is the 5-period exponential moving average, and at here the blue has now crossed the red line, so that's 1. So the blue, the 5 EMA, has crossed from below to above the 9-period EMA, so that's a potential long trade. Second entry is the fact we've got to break the midpoint of the Bollinger Bands, and the Bollinger Bands on here, these green lines, upper Bollinger Band, lower Bollinger Band, the mid Bollinger Band. So the mid band has been crossed by the candle. So the EMAs have crossed, the exponential moving averages have crossed, and we've closed above the midpoint of the Bollinger Band at the conclusion of that candle. Okay, so our entry is taken there at number 3, which at this point was 122.05, whatever this is, euro dollar at whatever time this was. This was 9 o'clock on the 1st of March, by the looks of things. Okay, so that was the entry. That's the price we got, 122.05. What's the target? Well, the target is whatever the ATR was at that time, and 8 o'clock or 9 o'clock when that candle closed, number 4, the target was 8 pips. So we got in at 122.05. The ATR set to 14 gives us an 8 pip target, which takes us to 120, whatever that was, 121.30. Yeah, so we got in at 05, 121.13. Okay, so sorry, this is 122, doesn't it? Yeah, sorry, 122.13. So the stop loss in this case, and this is one of the criticisms I get about this system, is the risk reward is poor. Okay, now let me explain why this still works. So the turn, the stop loss, the turn, the low in this particular trend as we've been going. So we've been going down overnight, or during the 28th of February yesterday, we've gone all the way down. Overnight we went sideways, which is not untypical, but we created a floor here. So for 1, 2, 3, 4, 5, 6 hours overnight, we didn't go below 121.88 or 0.9, 88.9. But so the stop loss, the comfortable, safe stop loss is all the way down here. You could have had it a bit closer. We could have had it closer to the moving average, but the comfortable straight one is here. So that's the stop loss. So that's the risk you're taking if you know you went away and placed it on, and the target's there. So the target is, you know, it's less than half, isn't it, on that one? That's one of the big criticisms I get of this. Okay. However, because the reason I'm comfortable to take this is the fact the trigger has happened because we've crossed 3 key moving averages. We are above the 5 period, we are above the 9 period, and now the entry is triggered above the 20 period. So for the last strong sense of time, we've turned around, and you can see that clearly now in the chart. Obviously, you don't know what's going to happen here because that's the art of trading. We don't know what's going to happen to the right-hand side, but the left-hand side of the chart is showing us where we've been in a strong downtrend. It's bottomed out, and we look like we're turning around because the size of that candle's really, really big as well. And that's another. It's not written part. It's not part of the rules, but it's something you become used to by seeing this. Right. Somebody's saying they can't hear me. Can everybody else hear me? Okay. Yes, everybody else is saying they can. So Nagwash is actually on the way. You might want to try restarting your. Oh, I can't hear me. Can you? Let me just type in a message. Excuse me. And I'll get back to you. Try restarting webinar. Send. There we go. Right. Good. Yes, Gazi, you're absolutely right. That's one of the big criticisms of this, about this big stop loss and small target, but it works anyway. It works enough for me. Are you considering? Jonathan's asking, are you considering fractals on that? I'll come to the fractals in a minute, Jonathan. They're sort of a backup, and the RSI and all that sort of thing. But the two key things are the crossing in the EMA and then the crossing of the 20 period moving average to give us, and the ATR is the target. They're the 3 key things, okay? And the stop loss is down here. So I forgot what I was saying now. Yeah, so the size of the candle, these are stuff that becomes intuitive. So the size of the candle, the fractals for me here didn't really play a part, to be honest. Obviously the fractals are nicely aligned there as we've gone down. They're nicely aligned there as we've gone down, and we've sort of stretched down there. So the weaker, the other thing that would have triggered this one was that these wicks were getting shorter. So the pressure to the downside was weakening. We had a big one at that hour there. We didn't quite break. We broke over the 5, but we didn't break the 9. We went sideways again. Then this big one has engulfed all this action here. So that's a big positive one. Obviously, it's the beginning of the London session, 9 o'clock. So that's a big candle, taking all of this action out very quickly in 1 hour. You know, sometimes that can be just the market makers. London opens up, the big banks come in, liquidity comes in, and they're just shaking it out. They're trying to see, is this going to go back up? It could have easily turned around and gone back down. I can't remember, to be honest, on this one, but this is just an example of one. So this is a long trade on the EMA on the 1 hour strategy, and I'll bring up some live charts. Here's a short. The next slide is a short. Well, it should be, if it moves on, is a short trade. There we are. So this is the short one. This is a gold one that did run to target quickly. I don't know if you can see that. It looks a bit small, doesn't it? So exactly the same thing. So here we've got the 5 crosses the 9 from above. So here, different colors this time. And this is my standard default colors. This works for me. Again, you can use different colors, whatever, but these are the colors that I use. I'm not saying use them. There's a slide in a minute which shows you what colors they are. It's really up to you and what works for you. But again, it's the 1, 2, 3, 4, 5, 6 steps. So here we've got the blue this time, crossing from above the yellow. So here we crossed here at this hour here. Hopefully you can see that. Perhaps I should choose it on the, I'll use some live charts in a minute, but there the crosses there, but we haven't crossed the blue, the green line. This was a real trade. That's why this one's happening. So the real entry there, can you see where the white candle there with a great big wick? That was the real entry, but that must have been, I must have still been in bed or not seen it. Okay, missed it basically if I was trading this during the day. This is gold, this one. So the entry wasn't taken until 2 hours later, but it was still valid because the second hour had gone against us, although stop loss would have been up here. So the entry wasn't taken until 10 o'clock on the completion of this candle here. So we've crossed back there, and we didn't cross the green line successfully. Well, we did there. That would have been valid enough, even though this one went back over the green line. The entry was there. So the turn this time was here, and it was because it was a round number. It could, I mean, safe. I mean, it should have been perhaps higher up here at 138 or something, 1338. But for this one, I remember 1336 was a key resistance in a higher time frame. So the stop loss on this instance was back up here at 136. The target was the ATR was 2.25, so that's 225 pips away. The gold's traded here, or just over $2. But because the target was, or the entry is at 132.30, 232.30 minus 225 takes it to a big, very close to a big fat round number of 1330. That's where the target was, and it spiked to it, not straight away. It obviously took a while. So the entry was here at 10 o'clock, but it was 11, 12, 1, 2, 3 o'clock before that actually played out. It never went really against us, but again, it's that patience that somebody was asking about before about staying in. My target was here, and it was just about waiting for it to conclude. Okay, so that was a successful trade. And what I'm going to show you with some live charts is this. Once a trend breaks or is formed, and we've confirmed it with this 5 and the 9 and the 20 break, it can run and run and run, and that's what we've had recently with the dollar crosses, and there's been some very strong trends in the market at the moment, but that's only been running for the last few weeks. Doesn't mean it's going to last forever, but at the moment there's some really strong trends, some simple trends. And I'll show you the Aussie dollar yesterday, for instance. It trended all the way down and it turned around, did all the way back, but it followed the rules 5, 6, 7, 8. Now I can't remember how many times it triggered yesterday and overnight. Very, very simple and comfortable sort of targets to get in and get out. Because once this one, so for instance here, once target 5 was hit, target was hit here at 3 o'clock. These moving averages now are nicely aligned. We've got the 20, the 9, and the 5 all turned down, all pointing down. So that's suggesting, no guarantee, that we're still going to move down. And obviously the move down, this is one of the reasons I put the pivot points in there. The resistance we stopped at the pivot point. That's the daily pivot point, so it's likely to hang around there. So we ran into it for 1 hour, 2 hours, 3 hours, 4 hours before we broke off. I haven't got the rest of this chart, but my assumption is that this probably kept trending down if it did actually break 1330. But because that was a big round psychological number, it may not have, because it's very close to the pivot point and it's a big psychological number, so it could have bounced off there and bounced back up here. Instead of rallying up. Sorry, something just went off in my earpiece. I didn't think anything was going to, but anyway, that's an example of a short trade. Now this was an example of one. I was in our education center in Lagos in Nigeria. We were talking. This was on Wednesday, and we were doing a seminar up in Abuja on the Saturday. And I was just we'd done some training all day, and when we talk, and we had this chart up, and this triggered literally as we were finishing the day at 6 o'clock. So this is a classic moving down. This is the New Zealand dollar against the US dollar, and again we've got the blue line crossing above the yellow line here, and also at that conclusion of that hour at 6 o'clock, it also broke over the midpoint of the Bollinger Bands, even though this was still moving down. If you look at the yellow line and split the screen in half and look to the left, you can see that we're sort of been going down. So, and it looks like it may be turning around. Obviously, we had no idea that this was going to happen. We rallied all the way up here because at that time, and again, that's another criticism I get. So, well, why didn't you just keep going? Well, you can keep going, but don't get greedy, don't get scared. So the rules are, The moving averages have crossed. The 5's come from below the 9. It's closed above it. We're broken over the midpoint in the Bollinger Band. The 20 period simple moving average, we closed it. What's the ATR? Well, the ATR was whatever it was, 11 pips here on this example at 6 o'clock. So 11 pips from 71.78 ticks to 71.87, and within an hour or two, it hit our target. Thank you very much. But this was whatever time this was. I was back in the hotel and having a beer by then. So this is what 6, 7, 8. So 9 o'clock. If you'd still been trading this, 9 o'clock, we'd got to target at 8 o'clock. And what you can do, and what a lot I still do, and I'm happy with it, is then enter again here. And we'll see that from yesterday, from the Aussie. We'll bring that up in a minute as an example. You could have entered again there because the trend is now turned. It's moving. We've had 4 hours up, 5 hours up, and it's looking strong. The candles are getting quite bigger. This candle here is bigger than any of these previously. These are nice, similar sort of size, so we've got some energy there. So you would have taken another one there. The ATR is still about 11 pips, so you could have got another 11 pips out of that one as that had rallied up. Another, at the conclusion of this hour, these moving averages are still pointing up. They're still nicely aligned. There's a nice angle. They're pointing up. So you could have entered again there for perhaps, I don't know, we would have jumped up to 15 pips there. Would have got that fit? Well, possibly. But again, the beauty of the 200 period, we can see, well, there's a big, strong resistance on there. On this particular chart, there isn't the daily pivots on this one. So that might have come into play as well. But again, if that would have been, if we'd entered there, 15 pips would have taken us quite close to the 200 period. So we know we're going to get some resistance at the 200 period because it's always a strong resistance. But again, that would have worked out perhaps then. So if that had hit target during that hour, you could, would you have entered the fourth time? Well, possibly, because it's still on the uptrend. Excuse me. So you could have entered there, but knowing that the moving average is there, so we would have said, well, what was the ATR at that point? There's a strong resistance there, so you perhaps put your target close to that and use the ATR within a few pips. And again, you would have got there, but you've had to wait much longer before it actually went back through the 20 period. And all the time, your stop loss needs to be below the turn. So as the original trend here, again, as Ghazi quite quietly pointed out, and I'm not hiding this, remember the stop loss here is much bigger than the target. But the theory is, or the logic is, and again, that the theory or the books you would read saying, well, that doesn't make any sense. I'm going to end up losing lots of money doing this. But in real life, this is what happens with trends. This is how real life trending is, not the theory, not just in the books. In real life, in real markets, this is what happens. So lots of people say, well, I won't take a trend, or recommend that you don't take a trend unless the risk reward is at least 1 to 3 or 1 to 4 or 1 to 3.5 or 1 to 2.5. I'm not saying that's wrong. Of course it isn't, because it's a really sensible, safe way of trading. But here I'm saying this works even though the risk reward is quite poor. Obviously, when you do get stopped out, the stops can be quite big if they are down below the turns in the market. And if you haven't got trending markets, these all look great because the markets are trending. When the markets start going sideways, moving averages are no good. And that's why the other thing you want, not only do you want them to cross, you want them to be like moving in a direction, either up or down, and some distance between the moving averages as well. Some nice sort of distance. As you can see here, this is a good example actually. As we've been going sideways here, the distance between the moving averages, the variance from the mean, which is what the moving average is. Remember, the moving average just smooths out the highs and the lows. It is very low, so there's not actually much action there, and therefore the market isn't trending. The market's going sideways. Trending indicators like moving averages are no good when the market's going sideways. That's when you want to be looking at your oscillators like your stochastics and your RSIs and what have you. But anyway, so that's an example of a live one we did back in Lagos back in March on our last seminar in Lagos and Abuja. What a great trip that was. So these are the settings that I use. I'm saying you use them, don't use them. Use the colors that fit your eyes, fit your screen size. By the way, can I just ask at this point, how many of you out there trade off who trades off a phone only? Who trades off their smartphone only? Out of the 50 odd people are in here. You don't have to answer if you don't want to, but how many of you trade off your smartphone only? Oops. I'm halfway. I'm at the questions at the beginning of the seminar. I haven't got the. No way, says Justin. It's hard, says iPhone. So I quit it. Yeah, okay. So those of you, right, I'm assuming that's all of you. So the rest of you presumably trade off a laptop or an iPad or something like that. Yes? Oh, analyze on a computer, enter on a phone. Okay, interesting. Laptop's cool. Jonathan, laptop. I'm new to this. That's fair enough. Gavin, no problem. Welcome. Warren, laptop. Okay. Any of you actually sit at a desk with a big screen or number of screens, like a 24-inch screen? Have a trading setup. I'll explain why I'm asking the question in a minute. Justin, you're just showing off. But congratulations if you have. 4 screens, no screens, 49 inches, 4K monitor. You're a rich bunny, Justin. No screens, 34, says here. Good, okay. The reason I ask is sometimes 2 screens, Android is good enough. Okay, right. Let me just say this at this point. I'm not. Where are we in time? Oh, we've got plenty of time. Too many people, I think, or I see, trying to do things on a very small screen on their phone when they're either on the bus or on the train or trying to talk to their girlfriend or boyfriend or their mother or their father. This is a serious business, okay? Treat it like a serious business because the market doesn't care who you are, doesn't care how big or how small you are. It will take your money off you. It will gobble it up. And if it's the last, $500 or $1,000 you've got in the world, it doesn't care. If it's, it's the last $10,000 or, that's $100,000, the last $1 million, it doesn't care. It does what it does. It goes up, it goes down, it goes sideways. It's a very efficient beast for generating money and taking money off people. So you've got to treat it with a bit of due diligence and a bit of respect. So don't try and trade too many charts at once. Get in a system that works, and I'm going to come on to that in a minute, that works for you and that fits in with your lifestyle and that you can see comfortably on the screen. So Alex here is saying he's got a 42-inch screen desktop. That probably means, Alex, that you can look at a dozen charts easily on that screen. At work I have a 24, I think these are 24-inch ones, aren't I? And I'm looking at 1, 2, 3. I've got a dozen here and they're a little bit small on the 1 hour chart. But when you're trading the 4 hour time frame, because the spreads are wider, but your targets, spreads aren't any wider, I should say, but the targets are bigger and the stop losses are bigger, you can trade a wider spread of currency. So you can trade, the only one I'm not too comfortable with on the 4 hour time frame is the Swiss franc crosses, but that's just a historical thing from 2015, but I've sort of brought the Swiss franc back in. So I'm happy to trade all 28 of the major crosses, as well as gold and oil and cryptos on the 4 hour time frame. On the 1 hour time frame, because obviously the spreads are the same, the cost is the same, but the target is smaller and the stop losses are smaller, I tend to just trade at 9, 10, 12 maximum, okay, if I was going to trade those. So I forgot what I was going to say then. Ghazi's written something that's made me smile. I've completely lost my thread there. I can't remember what it was. I guess I'll come back to the point I started a minute ago. So the point is, you need to be in the right frame of mind to be trading as well. Never have any alcohol, never have too much coffee if you're trading, never be in and Ghazi's point is quite interesting here. Ghazi's put here, I live in a very hot country, the computer is very hot to use, I feel more relaxed on an Android and on my 4 hour chart. Well, that's absolutely fundamental. You've got to be in the right frame of mind. If you're tired and exhausted, there's no point in trying to think logically. Because money clouds how we think. So you need to, trade the time frame, trade the times that fit your personality, fit you, and have something you can see properly. So that was anyway. End of little lecture about where you trade, and obviously being in an environment that is, like Ghazi says, that is cool and comfortable. Don't if it's too hot, you can't think straight. You will make bad decisions. And that's what this business is all about, making comfortable decisions that you're comfortable with, and you're comfortable with the outcome, whether you win or you lose, but you learn from every single trade you make. Anyway, let's get some charts up, are we? So these are the colors that I use. It's very simple to set up. Tinash has put EA plays music to clear his mind. That's interesting. I tend to do that at the beginning, at the end of a trading session. So these are the colors. So the trending ones are the EMAs, 5, 9, 200. The Bollinger Band set at 20 and 2.5. That's just a historical thing. They come out default in the MT4 set at 2. The oscillators are the RSI 14 and ATR set at 14. For ATR, remember the average true range for getting targets. The fractals, you'll need to go to Bill Williams /fractals, and they come out with default as grey. And then you need to go to the navigator on the hot forex pivot. But let's do one for those of you that are completely new. I assume you all want me to actually show you how to do this, or you all obviously if you've got a 47-inch screen and K4 screens and 35-inch screens and 42-inch screens, you're obviously proper traders, so you probably don't need me to show this. But for the new guys, let me just bring in the MT4 screen. So this is sort of things you'll be looking at. So moving average, Bollinger fractals, this is what it looks like. Okay, so let's just go through a quick setup. Donna said yes, please. So let's do this for Donna. All right. So let's just bring in. So this is my. Let's have a look. Check time again. Where are we? 20 minutes. Okay, so this is it looks a bit messy, presumably on your, if you're looking at this on a screen. Obviously on your big screens this won't look too bad, but this is the typical 9, 10, sort of 13 pairs I will monitor on the 1 hour time frame. So it's basically the dollar crosses, all the major crosses. So the euro, the yen, the pound, CAD, Swiss, Aussie, New Zealand, and then I also look at the euro pound, euro yen, pound yen, gold, Bitcoin, and oil. Obviously, you've got to be careful with gold and Bitcoin because the spreads are huge, even on a zero spread account. So, got to be careful with those. And the spreads can be a bit wide on the Aussie and stuff and the Swissy, but they're the ones that trend quite nicely, and they're the ones I have this set up on. Okay, so let's set up the chart, and once you've got this set up, you just save it as a template, Donna and anybody else that's new. And so let's just do this from first principles. So new chart. So let's do whatever comes up first. So Swiss franc. So in MT4, it defaults to 1 hour. It defaults to green, the high green bar chart. Sorry. Green bar chart on a black background with the grid, and set up for the 1 hour. So we don't want that, do we? We want well, get rid of the grid. I get rid of the grid, and this we want. This is how I set it up. So I want. This is just me. So we set this up for candles. Again, the default is black up, white down. We don't like that. Well, I change it all to red. So let's just do this really quickly, hopefully. So you go to the properties, click, and then you just change all the colors. So an up bar is, my brain's gone to sleep. Up bar is white. White is there. Down bar is red. So red is here. Bull candle is up. Bull is white. Bear is red for me. Again, this is just the way I had it set up, and that should look there we go. We're nearly there. So this is a candle chart. White means up, red means down. Wicks are, trust to the top. We opened here for the red candle. We closed there. That's a candle chart. So now we want to insert all those indicators. Moving average 200. I have it set at is that right? Gold. I think is that the right center? I can't remember now. Let me check. Orange red. I said, didn't I? Not gold. But so orange red is that one, I think, isn't it? Oh no, it's not. It's that one there. Dark orange. No, it's not. You see what happens when you mess with things. Orange red. Well, let's just leave it gold for now. So gold or whatever color you want. So it's set as moving average 200 period. So you change the period. Change this from whatever you want. For the intraday, I have it set at exponential, set to close, and click it on. So that's the big 200 period gold line. Next one. Insert indicators. Moving average. What was our next one? Our next one is the 9. What color is the 9? We like the 9 to be yellow, so we change it to yellow. Exponential. Apply to the close of the candle time. That's what we're interested in. We don't want any of these others. Okay, leave it default to close. You can play with these, but that gets all a bit more complicated. So that's our yellow one. Next one was the Sorry, insert indicators, moving average, 5, wasn't it? And 5 is our nice blue one. So we have that, what I call it, cornflower blue, isn't it? Which is, where's it gone? See, it's all very good setting this up before steel blue. There we are, cornflower. So that's our 3 key moving averages. So there we had a cross there here on the Swiss there, and that crossed there and went up, but did it go up? So what do we want? We want the next one. We need our moving out. We need our Bollinger Band. We need our 20 period moving average on that. So insert indicators, and moving average is also a trend. So you can go down to trend. These ones here will default the ones you use the most often sometimes. So that's why moving average is up there. But moving averages is also is a trend. So trend, moving average, we want the Bollinger Band. And this is, again, it's default to my setup. So I've got this as medium sea green. Again, you put the colors on you want. The deviations I've set at 2.5 just because that's always why I've set them. 2 is default. So that puts that on, and that's the green ones. Right, some questions coming in here. That's absolutely no problem. That's what I mean. Shifting means what, please? Shifting in Bollinger Band. Mohammed, I don't understand your question. Shifting. Have I said something? Sorry, I tend to use vernacular English, which can shifting. Mohammed, I'm not quite sure what you mean by shifting. Do you mean the deviation? Anyway, I'll keep going until Mohammed answers me. Again, the thickness of those lines looks a bit thick. Actually, I might change that. So what you can do, if you indicate a list, and it tells you what you've put up. So indicator list, the Bollinger Bands are a bit thick for me, so we'll change it back to the thin line. Okay, so close. So there you go. Indicator list to change. So they're default, but there you can see what's going on now. So that's the 3 moving averages. What else did we say we had on? Well, we have the shift in the short window of making Bollinger Band. Oh, Mohammed, I'm sorry, I don't understand. Mohammed, I'll send you an email after the webinar, okay? I'm not quite sure what you mean. You can try and explain there, or send me a screenshot. Shift is, okay, shift is 0. Okay, yes, fair enough. I'm just trying to keep this simple, Mohammed. Thank you for, yes. I'm trying to keep this simple for new guys. So next we want to insert, what we're doing, oscillators. So the next set on that, remember the screen with the oscillators on is the, where's he gone? Where's he gone? Where's average? So actually, let's put RSI on first because it's there it is. RSI, relative strength index. Set default, it sets 14. I'm happy with that. So crimson is the color that I use. So that adds, and that goes to the bottom underneath the chart there. So obviously the theory with RSI is anything over 70 is overbought, anything under 30 is oversold. Okay, so it not oscillates, it moves between these 2 ranges. And so when it gets over 70, you might want to think, it's got a bit overbought. Is it going to go down? The probability is it will, but sometimes it stays over there forever. And same with under. So it's nothing works all the time. So next one, insert. So we're still on oscillators. The next one is the most important one. And a key one is our average true range. So there we go, average true range. I have it set at Dodger Blue. I have it set at 14, and there we go. And that's the one that gives us our target at the end of the time frame that we're trading on. Okay, that would be fine. I mean, it's up to you how much you had on, but they're the key things. The moving averages, the Bollinger Bands, and the ATR to give you a thing. The other things that I just add, I've got on there, these are not absolutely necessary, but I like fractals, guys, so I just give them on just as a second heads up, really. So we do insert indicators. Now, fractals are found under the guy that created them, a guy called Bill Williams, and there they are there. And again, they're just set as the default setting. They're little gray arrowheads to show a turn in the market, and because that's how I trade. I'm a trend trader looking for turns, looking for energy change. That's why I like the fractals. So it's indicators, Bill Williams, fractals. Click on that, and it comes up as the default setting is gray, and you'll see the number. I should say 14, but it doesn't. But anyway, so they come as little gray arrowheads. So here we've got, there we go, up and down actually in that hour. So that's created a new high, that created a new floor, which is interesting when that happens. Suggesting proper indecision when you get them. That doesn't happen very, very often. You get a fractal high and a fractal low in the same time frame, but it does occur from time to time. And therefore, because it doesn't happen very often, it's quite interesting and means something may be happening. And here you see the downside. I'm getting off track again, aren't I? The downside here became the relevant move on the most. And so we went down, but we claimed the form. So there you go. You can see that floor is nicely formed there. We came back to it then, but then we went off there, and that's our entry there. There we go. We just had an entry there this morning on dollar Swiss. Anyway, I'm getting off the point again, which is why I can easily get distracted. What was I doing? Where do we get to? Navigate. Right. The other thing is the pivot points, the daily pivot points. So where do you find those? Well, you need to go to the navigator button, which is here, which is Control N, or this little logo here. This is Navigator, and this should give you all the things that you can put on your charts. If you haven't got all of these, make sure you update your MT4 platform. Speak to us support guys. But the new, well, not new, what we're talking about new, but the pivot form is here. The pivot what I use is this one. It's called Hot Forex Pivot. So all you do is click on it, or double click on it, I should say, and it brings up this little box and it tells you how you want it set up. So again, default is fine. You know, you can change the type of colors, you can change the time frame if you want to. I'm happy with the default settings because it's just a bit of a heads up, the pivot points. So this gives you the daily pivot from the previous day, or so this gives you ideas of where resistance and support might be and where the price might pitch around for the rest of the day. So again, it gives you added areas of perhaps targets and support areas. So there we go here. So it comes on as orange for the pivot and green for support. So you get S1, S2, and S3, different sizes, R1, R2, R3 for resistance. Remember, this is the daily setting, so obviously it looks quite a long way away because we're only on the 1 hour time frame. So let me just get rid of that. So that is our standard setup, and that's everything that's on my standard chart. So if we just zoom that up a bit and zoom in a bit, actually no, let's not zoom up a bit. What is this telling me? Well, this is telling me follow the rules. Let's just go back from where we are now. What's happening now? Well, the dollar, without knowing anything about any news or what's going on, what is the chart telling me? Well, the chart is telling me that the dollar Swiss is quite strong. And if we'd been trading this, we would have got an entry here this morning. Can everybody see why that is the entry? Yes, from what I've been saying this morning. Yes, it's free, Thosa. Don't worry. I'll listen to other brokers. They use the indicators we don't have and asked to buy these indicators from web hours. No, Thusa, that's the problem with this business. There are a lot of unregulated brokers out there. There's lots of people out there on the internet that just want to sell you something. They either want to sell you an indicator, they want to sell you a robot, which is probably the best in the world, and it's probably got a 90% win rate, and you can be a millionaire in 2 weeks. If I had a cent for every email or indicator I've seen over the last 20 years, Thusa, I would be a richer man than I am today. Trust yourself, trust your gut instinct. If it sounds too good to be true, 99 times out of 100 it is, okay? Learn to do this yourself, because this business is all about you. It's not about listening to guys like me. It's not about the best broker. It's not about the best indicator, because there isn't such a thing. They're all, we're all good as not all as good as each other, but there's there's good guys and bad guys out there. So it's all about money, and obviously it pulls in lots of naughty people. So trust yourself. It's okay. Webinars at hotforex.com is probably the quickest way to get hold of me, to be honest. Or join me on Facebook. I'll come to that in a minute when we come to the end of the webinar, because I'm going to run out of time as usual. Yes, 10 minutes. So what is this telling us? Well, this is telling us that we would have gone long here because it's fulfilled both criteria, hasn't it? We've gone sideways overnight, nicely downtrend. Actually, would have been short there because we went, actually, that's a good example of perhaps a failed one. So let's just go back a few. So what's happened yesterday? Let's just go through that. I'll bring up the Aussie yesterday because that was a classic yesterday. It looks a bit messy, the chart, but so what's happening? We go back here. So we got a cross there. So that would have been a short. Yes, can everybody see that? So the blue line, the 5 has crossed from above the yellow, under the yellow, and down. So, and then the same candle, the same time, we've closed below. So Swiss would have gone short then. Yes. What's the target? So that would be our entry. Where's our target? Well, our target is whatever the ATR is at the time. The time was whatever time that was, 10 o'clock yesterday morning, the 6th of June. We would enter short Swiss, dollar Swiss. Our target would have been something like 5 or 8 pips. 7 pips is our ATR at that point. So we get in there. Our target is 89. Well, we got in at 89.73. So 73 minus 8 is, when I went to school, was about 65, wasn't it? There we go. So that would have ran off to target straight away. That's great, isn't it? This is easy, this trading lark, isn't it? So in there, 8 pips. Thanks very much. Our target was wherever it was, about there, wasn't it? 65 or something. That's not exactly, but let's bear with me. So trend. So what do we do now? Well, this is what I was saying before. Because the trend's now broken, we're under the 20 period, and these are nicely pointing down. We could have entered once we'd got to target. So 2 hours later, we'd got to target. So we come back. Conclude, we get our little ping goes off. We've hit our target. We got our money. Thanks very much during that hour. So what happens? What are we going to do now? Well, I would have been happy enough, probably enough to take another short position there. Okay, and this one probably hasn't worked out. Okay, because these two there's nice air now, distance between the two. The only thing I would question about taking that trend then is that the 20 period hasn't turned down. It's still flat. So they could be running out of steam. What you want them to be in a nice line like this, pointing in the same direction like we've got here. Because that's moved really aggressively, this hasn't had time to turn around. But anyway, so they're still nicely aligned here. So we'd got in there. What's the ATR at that point? Well, the ATR now, where are we now? We're now at 12 o'clock. The ATR has changed, obviously, because it, like an ATR, it's just another indicator. It goes up and down. So now we're 8 pips, not 7 pips or whatever it was. So 8 pips from here. Doesn't look like it's worked out, does it? Let's just do the maths. 59, so that we should have got to 51, and we didn't. Look, we stopped at, one of those trades that didn't quite get to target. Well, we might have done 50, actually it would have done, because 50.09 is the floor there. So if, spread would have probably kept us out, in all honesty, on this one. Okay. But anyway, so let's assume that didn't get. Let's assume we got very. Let's do this. So our target would have probably been just under there. So we wouldn't have. Oh, bloody hell! No, it got very close, but it turned around. Where would our stop loss have been if we'd entered here? Okay. Well, the turn is all the way back up here. But do you want to lose that amount? Well, not really. So my stop loss, if I'd got in here, my stop loss would have probably been up here somewhere over the. Let's change this a different color. My stop loss would have been around about here. So above the pre, let's change the color of that one because it's all getting a bit complicated, isn't it? Change that to, oh, it's not working. Change that to yellow so you can see it. Okay. So up here, and so I would have been stopped out. So that was quite a, relative, I was looking for 8 pips and I'd probably end up losing 12 pips or so. So that would have been, well, that was 59 to 72. So yeah, 13 pips if the stop loss had been there, but it would have been stopped out there. Okay, so that would have been a losing trade. So we'd had a winner and a loser. We're actually out of pocket, aren't we? If we'd had left our stop loss up there, we're actually won 8 pips, we lost 13 pips. So, but what's happening now? Well, this is looking quite strong, but we haven't crossed again. We haven't turned around yet as far. We cross here and we're back up there. So that would have, if you're following this all the time, that would have been another entry there. Hang on, what am I doing? I haven't got this up. So, oh God, what happened then? Didn't mean to do that. Sorry. Oh. Oh, it's disappeared. There we are. Phew. Pressed too many buttons on the keyboard. Because that's open, that's why. Right, so we'd have, so following the rules, we'd have entered there because we'd crossed here, blue from underneath, above the yellow, it's not great, but it's a strong candle and we've closed, or big-ish candle, and we've closed over the 20 period. So this is 5 o'clock last night. We'd have entered there and, hope this one would have run off to target in the time frame by the looks of things. So that would have been another entry there. ATR is now, because we were rising, it's about 10 pips. So we got in at 98.78. We'd have ran to yeah, 98.90. So that would have been a winning trade. So we're back in the money now. We won 10. What did we do? We won 8, lost 13, won 10. So we're back in the money there. So that's thanks very much. Are we still going? Well, no. Would we take another trade? Well, no, because by the time that we run up to our target, by the time the hour closes, this is suggesting weakness. And why is this suggesting weakness? Well, we'd ran up to this level there and that level there, which were 2 fractal highs before. Remember, this arrow, this fractal high, wouldn't have plotted. We're also quite close to the 200 period moving average. So this is sign a warning sign. And this great big long wick here is also saying pressure more likely to move down to the downside. Justin saying, sorry, I forgot that I missed the part about where the stop loss. The stop loss, Justin, should be where the market's turned. Okay, so on this occasion, this first one here, the market turned here, so the stop loss is up here. The second one where we got stopped out, the stop loss should also be up there because that's really where the market's turned. But I'm only looking for 8 pips, so that's a massive stop loss. So that's saying, So the second one is this yellow. The second stop loss would have been this yellow line above the. Sorry, no, I'm talking about. We got in here, didn't we? The second one. So the second stop loss was there. So it's above the close of the previous candle, basically. Okay, Abraham, I'll show you lots more trades. Don't worry about that. Where was I? Just now, I hope that's answered your question about the stop loss. Should do this more. I should have used different colors on here, shouldn't I? So that one's worked out, and then, but I wouldn't have taken another long trend on the close, even though it's above the 20 period, and that these are crossed because there's not much fresh air, and it's 6 o'clock now. And the market is, can get a bit funny after that. Lots of things for not taking that. I didn't mean to, but you can see there's a big wick up there, so that's not a reason to take it. This hasn't come, and then the fire. So we leave it. Patience, and now, so that run up, in fact, has just been a retrace of this downtrend. So we retraced 50% of that move there. We stopped there and turned. So that would have been your next entry. Okay, so we didn't enter. Actually, let me just check that. And that's how these stories work out. Mohammed, TP, sorry, TP is take profit. It's take profit and so on. Let's actually do this on a clean chart. Let's just clean all this off again. Oops, what happened then? Oh, buy limit, and I didn't mean to do that. So on this demo account, right? Let's just let me clean all these lines off and start again. Okay, let me get some of you asking questions about that. So, oh, God, that's what happens when you trading live. So let's get rid of that for a start. We don't need that, do I? I don't want that. I don't want that. Thanks very much. What are we doing? I want to indicator list. No, I don't want indicator list. I want object list. Deary me. Dear, right, let's clean all these lines off. So delete, somebody said let's do another chart. Right, so let's bring this bang up to date. So the last trigger we'd had on this one, let me go through this probably. How much can we take profit or take profit in this system? Mohammed, it's all about 15 minutes is probably a little bit too short, Mohammed, but because the ATR will be quite small, but it does work. But you've got to be on top of your game, and the spread, you've got to have a really tight spread. So that would restrict the chart you want to use. Okay, you've got to ask yourself, Mohammed, why are you trading on 15-minute time frames? Is that what fits with your lifestyle? Is that what fits with your personality? If it is, try this and try it running, because it works quite well on 30 minutes as well. But let's just do another demonstration of this system here. So like we said at the beginning here, this is what do we do? So where was our entry? So the cross, as you can see here, the blue line is going sideways, but it's drifted over. So if you'd been keen, if you were up at whatever time, if you're up at 10 o'clock, that is the real entry. Although we're going sideways and there's no direction, but that's your first heads up here at 10 o'clock that this may be going long. Okay, so that has followed the rules. We've had a cross, it's above, and it's also above the green line. So that really is your first entry. What's the caveat? What's the negative of taking that trade? Well, the pivot point is just here. That's not very far away. What's our ATR? The ATR would take us way above that, wouldn't it? 9 pips. So 9 pips from here. Let's just do this again. So that would really have been the entry. Okay, there's a strong one coming out. So 98.51. So what did I say? So 60. Round number. That's interesting, isn't it? 98.60 was well up here. No, it's not. Let's just do this. 98. Let's call it 60. Is that right? Is that what I said? 9 pips. Okay, close. So it's significantly above the pivot point. So would it have taken? Well, yeah, it's okay. Okay, so we'd have taken that then, and our stop loss would have been down here. Now then, we would have still been in because this is the turn here. So the stop loss on this one is where this turned around, which is really these sort of pivots there. So that would be. Let's make my stop loss red actually. Let's just do this properly. So let's make it clear. So the stop loss red. Okay, let's just change. Let's change these object list. So that was the what's that 90? That was the target. So let's make the target blue. Blue is good. Red is bad. Okay, so target. So yellow's our entry here on this line. So we got in at the yellow. Target was the blue. Stop loss is the red. Now I put the stop loss where it has to be. Now then, again, the stop loss is bigger than the target. So what do? Well, you make sure that this distance here, whatever that is in pips, means that you're not losing more than 1 or 2% of your account, whatever that account size is. Because even if it does get hit, it's manageable. You know, if this does go back to here and stops you out, and it's more than 5% of your account, you very quickly end up with an empty account. So what's happened? Well, we've gone side, so nothing's happened. And then we finally get to target here, okay? And because this is such a big candle, so nothing, so 9, 10, 11, we got to target during this candle here, didn't we? But again, obviously it's easy to say this now because we see we've run up, but remember, these three haven't happened as we've got here. So we've got to first target. It's taken a while, 1, 2 and a bit hours, but we've got our 8 pips or 9 pips, whatever it was. What's it now suggesting at 1 o'clock now that this candle's closing? Well, to me, it's suggesting it's still got some strength because our recent fractal highs, this one's been plotted now, is here and we've broken over it. And there's 3 up here. That's interesting. Where are those 3? Well, look at that. They're above the resistance 1 and they're close to the 200 period moving average. So this is a clear zone of resistance because we've got R1, fractal highs, 200 period moving average more importantly, and then the fractal high. So this is a clear zone of resistance. We know that at this point. When we know that at this point when we open the trade, because this is already here, the resistance is there, that moving average is already there, and those fractals have already been plotted. So we know that that's a resistance area. But that's a big strong candle, that one that's completed there at 12 o'clock. So I'm happy to take another entry on that one with the similar rules. So we just bring the stop loss up probably to about here, because this is the midpoint now. This is the morning, or even here you could have done, it's easy to say that now, but it would have been here where the market's turned. See where the bottom is overnight there. So stop loss would have been there. We'd have entered here, and our target would have been, again, whatever the ATR was during that hour, which was, I don't know, another 10 pips on that one. Okay, so off we go again. And that would have been here as well. Anyway, hopefully you get the point, and you can do this. I say if you're going to trade this, let me just go back let me minimize that, get rid of that altogether because we've done that. And I was going to show you this Aussie one, but I'm running out of time. I'm over time again, aren't I? But this is a real example of how the system worked. Yes, it's really messy, isn't it now? But you can see it's tracked all the way down. The last one, I think there was 6 there. 1, 2, 3, 4, 5, 6. There was 4 winners and 2 losers yesterday on that one. The last one, it didn't go down. And where did it stop? As I said on the video, if you watched the video this morning, it stopped at 76. And then it went sideways, and then it turned around because the GDP was coming out. It turned around, and if you've been, the model would have triddled there at 3, and then 4, and then 5, big one, and then again. Took a while to get to that one, and then again here, I think is that the entry? Yeah, that was the last one there. That one hasn't been here. Is there another? I don't know if that was. No, that must have been the target here, 76, which is a hit here from here. That can't have been an entry, can it? At 9 o'clock one. Or perhaps it was, perhaps for some reason there's no time on. But anyway, you get the point. This is a trending, and when markets are trending, it's quite straightforward to trade that way. So I say, if you're going to trade it on the 1 hour time frame, sorry, I've run right over. I thought I had loads of time today. If you're going to trade it on the 1 hour time frame, stick to these dollar crosses. For the 4 hour, you can use all the major crosses, so the 28 pairs of the major currency crosses. Nedson's just asked, when do you enter the trade? When the EMA 5 cross? No, you enter. You need the two. Let me just go back, Edson. Let's just go back. Oh, where's the PowerPoint gone? Where's my PowerPoint gone? Where's the? Oh dear. What have I done? I've done something wrong. I'm over time and I've lost my PowerPoint. Nedson, just write this down, okay? I'll send you an email afterwards, okay? Sorry, I've lost my PowerPoint slides have disappeared. There's the two rules. The 5 and the 9 need to cross, okay? But you also need to be above or below the 20 period moving average, the midpoint of the Bollinger Band, okay? So what can happen quite often is that they don't all obviously always happen in the same time frame. So here, for instance, this that is a bad example. Because they've all happened in the same. So here we've got the blue and the yellow crossing, and also because it's such a big candle, it's also crossed the green line. Sometimes they cross here, like we got here, right there. So on this hour, hopefully you can see that. I can't zoom that in any further, but here at whatever this was 7 o'clock last night, or on the 4th, sorry, the 5 had crossed from above the 9 to go short here, but we didn't close below the green line, so that's no entry. And the other thing that would have put you off is a great big wick at the bottom of this, suggesting more upside. So that would have questioned. When it did finally close below the green midpoint of the Bollinger Band, because they'd crossed in that hour and the final confirmation was there, we'd entered right on the 200 period, which we know is a big, strong resistance. So although that's fulfilled, it would have been a losing trade. Well, eventually we'd have been stopped out about here somewhere. Or it depends actually. Might have, yeah, we would have probably ended up stopped. But again, it's an overnight trade, the Asian session going south. So we say we'd entered there because it fulfilled the criteria, because we had actually what am I talking about? It's that one, yeah. So that it closed, but it hadn't closed significantly really enough below the 200 period. So that would probably a question mark whether that was. So the long wick there would have put me off putting it in, and the fact we didn't close enough below the 200 period would have put me in, but it did fulfill the criteria. So it would have been a losing trade eventually, because we probably wouldn't have been stopped out till 12 o'clock the next day, but I'd have probably closed it before then because I got bored with it, because we were doing back over the, and then we had a trigger for a long position there, which also didn't close out. So again, that's a great example of the moving averages going sideways and not fulfilling the criteria properly, okay? So Nedson, you need to have the 5 and the 9 to cross, and then the second entry is the break of the Bollinger Band, okay? The midpoint of the Bollinger Band, that's when you enter, okay? Now say this works, let me just bring up, before I go, I know I've run way over time, but we're over time, aren't we? Another 5 minutes won't harm. The 4 hour system, where's my 4 hour? Here we are, intraday 4 hour portfolio is set up exactly the same, only there's more charts on there. And I like the USA 500, for instance, trends really, really well on the 4 hour time frame. Remember the 4 hour time frame. So these are some, you've got obviously bigger targets and bigger stop loss, but the rules are exactly the same. So here, I've been long here for the on this 4 hour chart since the beginning of the month here on the S&P 500. And the key break was here, and we had this is an interesting one, because this one looked like it was going to go short here, and it didn't. It didn't, again, because we're close to the 200 period. I only saw this on this one actually. I wasn't trading this one. So here, this is the 4 hour candle. So you've got to obviously the beauty of trading a 4-hour time frame is obviously the targets are bigger, the stop losses are bigger, but again, you don't have to look at your charts every hour. You can just come in every 4 hours. And if you're working, you know, the candles close at 8, 12, 6, 4, 8, and then midnight. You know, you can trade the ones that fit with your time frame. You don't have to trade them all. Thu's asked, is it good with a trade and stop? I don't really use trailing stop losses, but yes, Thu's trading stop losses are really good when you've got a strong trend established, because you just move the trailing stop loss up. So yeah, they work really well as well. But it's not something I do. But I've got neither. I'm neither. You know, I'm not positive or negative about them, but they work for many people, and they keep you in they keep you in the trend. So here the 4 hours. So again, it's the same principle, but the reason I point this one out is that here it's above the 200 period, sorry, the 20 period before the EMAs cross. So here it's the other way around. Most of the time, the 5 and the 9 cross first before they were above or below the moving average. Here, the 20 period, here we're already above the 20 period. Here we've been here, then we went under it, but not really. So here we closed above the 20 period, and the 5 and the 9 are above. So that's an entry there. Target was there, then it was taken again. So target was taken, was hit the dotted line. Another entry was taken at the thick solid line. Target took, you know, for 8, 9 hours before that was hit. Another entry was taken there at the green line. Don't know where the target was on that one. Is it the blue dotted one? Oh yeah, I think it was a blue dotted one. And it kept going again at the close of that. So we were still long there, because now, this is a great example of nicely aligned, strong trends. So once that's broken, we staggered down. See how they've crossed. Here we've crossed, and that is just very, that's what a trending trader like me wants to see. That's, you know, super sexy. We've got the 20, the 9, and the 5, all nicely aligned, all pointing up in a nice direction, not too steep, not too flat. Nice gaps between them, not too close, not too far away. It's a Goldilocks scenario, not too hot, not too cold, and you just keep adding to your position as that trends up. You know, add to the position, add to the position, add to the position, in and out with the EMA system. Or if you know, as if you're a trend trader, you know, add to your lot size as it's going up. It works, and that's you know, it's a very simple way of doing it. I've talked too much today, as usual. Mohammed asks, can we trade Tiger when it is in outline of Bollinger trigger? Yes. The Bollinger Band is just a marker, really. It's a question mark. It's a bit overbought. So that's the only reason I put the Bollinger Band on, not just a simple 20 period. But I don't, to be honest, Mohammed, I don't really use the outer and the upper lines on the Bollinger Bands for this particular approach. Okay. Good, thank you very much. I can't show you any more slides because somehow I've lost them. I can see them here on my screen here, but for some reason I can't get them on the PowerPoint. So thank you for your time today, everybody. Let me just have one more try of getting this. What on earth have I done wrong here? No, just a blue screen, everybody can see, can't they? Right, I'm going to call it a day. I'm very sorry about that. I say I will, those of you that want my email or the email address, is this a recurring webinar? Yeah, you have webinars through every Tuesday, Wednesday, and Thursday. Tuesday and Wednesday are always at this time. They're always at 11 o'clock GMT. Thursdays is 12 o'clock GMT. Okay, we can have as many webinars like this as you want to, so that's not a problem. The recording will be sent to you, Lance. No, like market analysis. Can we have more webinars like that? What, yesterday's do you mean, Thuza? Market analysis one? Yes, of course you can. That's what we're here for. Okay. Sorry about the blue screen, everybody. I'm going to close this now because it's a bit embarrassing because there's no. I'm talking to a blue screen. Any final questions before I go? Actually, let's put the even the chart won't go back on now. I don't know what I've done. Don't know what on earth I've done. Thank you very much, everybody. We'll see you all again next time. Okay, take care. Bye bye.